Hello, folks. This is Brandon Chapman with you today. The S&P, is it breaking before our eyes? Well, if we look at just today, for example, we are within points of an all-time high established back on July 31st. We've climbed the hill after some volatility for a couple of days. You'll notice we kind of test the high. We faded from that high in closing here in about 10 minutes near the low. Again, we're looking at this, you're thinking, well, isn't this bullish? We're near an all-time high. Well, all you got to do look is not very far away from it. You'll see that, look, RSP, the equal weight index, has not done anything. We're nowhere near the high. We sold off and we're still hanging near the lows. Of course, companies like Apple, for example, storming higher the last few days on, again, some taco news. Let's put 100 billion in the US. We'll eliminate some of our tariffs. Nvidia, again, not really too dissuaded by the agreement there. We had AMD, obviously, AMD kind of testing our highs. You just go through the list of Mag 7 companies, Meta near all-time highs as well, Microsoft, and you have all these Mag 7 companies that have done fairly well over the last couple of weeks. What that means is once we start to consider other members of the S&P 500, we suddenly find that the last 7 days have not been all that great, that we're basically near the lows, not actually near the highs. Once this Mag 7 fever breaks, again, what we're going to see is the broader market will start to be carried down. Why? Because these represent a significant percentage of both the S&P 500 and the NASDAQ. So again, I guess it depends on how you look at it, whether or not we're really in a very bullish position in the S&P 500. Now, again, that's just talking about the lack of breadth to this rally, especially from the August 1st low. What about volatility? You look at the VIX, for example, VIX. This is a 30-day volatility measure. We're back near lows again. Again, we saw a bullish movement in the market generally as the VIX is declining, but the VIX is only going to go down so far. We might grind it out here down close to 15, maybe even slip towards the December low around 12. But the fact is the ability for the VIX to get crushed and drive prices higher is limited at this level. And in fact, when you start to look at 3-month volatility with the VIX at 15, 3-month is at 19. I like to take a ratio of the two, as you probably know, and we were above this level earlier today and on Friday. The 3-month VIX was over 20% higher than the 30-day VIX on Friday. And if I break this down to a 1-day, 1-minute chart, earlier today, just recently as the market's faded, it has a dip below. But for most of the day, we saw that the 3-month VIX was higher than the spot VIX. What does this mean? It means that the market, we're talking about institutional trading in the volatility markets, is expecting a sharp rise in the VIX over the course of the next 30 days. And guess what? As a result of those expectations, they're hedging. Well, how do I know they're hedging? You look at the skew index, and generally this is rising, but at 147, historically very high level, anything north of 130 would be high. What we're seeing is there's a high degree of hedging. Makes sense. You might hedge a volatility event. And I look at what's going on in the VIX right now, the 3-month to 1-month VIX ratio. We've been in this volatility regime since July 23rd. Now, we just didn't sell off a lot. We picked up quickly off of the August 1st low. But I would still look at the market and say, look, we're still under that regime. We just got further confirmation of that significant volatility expectation on Friday and earlier today. So the lack of breadth, the rising volatility, and the extreme hedging as represented by skew are all indications, right, that not all is not well. Now, we launched the Ghost Prince console last Wednesday. I'm going to show you something here. So, for example, I got to kind of pre-screen in order to find large block trades. So don't want anything. I don't want anything in that one. That doesn't matter. I have 1.5. Put in the wrong one. Our volume value ratio, vol alert, and location. We're looking at stuff, options that are being bought either as part of a spread or just individual calls and puts. As I sort this by vol alert, notice what happened today. 125,000 contracts bought, opened on the October 78. Well, if we look at it, we come in here, we look at XLP, what you'll notice is, and we look at that expiration in here, what you'll see is that this was a roll. What happened was wrong one. October 17th. Here we go. Notice that they closed out the 75 and moved that up to the 78 and did so at a reasonable amount of cost, 25, 30 cents. So what that means is they just spent a pretty decent chunk of money to move the strike up to 78. Well, who's buying 128,000 contracts filled quickly, if not the option maker? Well, what do they have to do? This creates what's called a gamma squeeze. They have to sell those puts. They need to short stock as a means of hedging their risk. And as we look at the intraday trade today in XLP, we faded early and we're fading late. And we walked through earlier today during my session, and we chatted about it in my Ghost Prince chat about the potential of taking a trade at the high up here. You know, could you buy an 82 and sell an 80? The skew is extremely beneficial. If you don't know what skew is, you're buying low vol, you're selling high vol. The cost is 50 cents, relatively cheap for an at the money option, only 32 cents out of the money. Why is their market so skewed? Because they're buying puts as protection, they're selling calls. And again, it doesn't just exist in XLP, McDonald's today. You know, people tend to trade down to McDonald's, and yet we found out from their earnings that people are backing away just a little bit. Yes, the company beat, but they did warn a little bit. The stock didn't drop much. We actually went up higher on a very rangy spinning top candle. We're rolling over a bit today, but the console's picking up on stuff before the move happens. And if I just type an MCD up here, what you'll see is they're buying a 305 and also buying 300 puts simultaneously. So again, they sent off at the exact same time. That's why we're picking up as a spread. You look over to the right, 240.50. Again, that's Eastern time. Buying 8,000, buying 10,000 of McDonald's puts. Again, 305, 300. We're looking at downside expectations. We start to break through 305, which we're about doing right now. Again, breaking through 305. Again, we're kind of waiting below it, and we start to accelerate towards 300. You start to see the gamma squeeze, and we could see this push dramatically lower. Not to mention the fact that top holding in XLP is Walmart. Walmart testing their highs and flirting with it. Earnings coming up on the 21st. And I'll show you what happened last Friday. We're going to go back in time right here with the console, and we're going to look at Walmart. Well, what happened to Walmart on Friday? You'll notice right here, they bought 10,000 puts in one trade at the ask. That's how we know they bought it. The 104 strike for August 15th. This is going to occur before the earnings or expire before the earnings. But we're looking for a significant potential downside this week. Well, guess what's up this week in terms of economic data? You go to Forex Factory. Notice we got CPI on the 12th of August. We got PPI on the 14th. We got core retail sales on Friday. What if the signs we got from McDonald's are actually pervasive? What if Walmart is going to start to experience some of the pangs of a consumer that's frankly kind of strapped? And we've gotten word, again, data that says they've been paying down their credit cards for the last 2 months. What if we're starting to see a pullback from consumers? Again, that's what at least indicating here. And if we're getting that with the market at a high, well, if we look at XLP, how much did XLP participate in the downside going into the end of August? Not a whole lot. How did XLU participate? Not at all. If we're going to see the market find lows and capitulations, we need to see general weakness across all sectors. And yes, we got to see the MAG 7 start to pull back. You look at MAGs, this is representative of that space. Back up against the high again. But again, we need to see more selling in MAGs and a breadth of sectors seeing a decline. So folks, again, what we're looking at right now is the reality that the market may be breaking down just before our eyes. The indication, or certainly the fact that we're seeing a lack of participation. We're seeing volatility expectations pointing to a 5 to 10% correction in the S&P 500 over the next 30 days. Nothing's 100%, but hey, it's pretty reliable indication. And we're seeing what? We're seeing some activity in stocks that should do well if consumers are spending. And we're just about to enter the retail season of earnings announcements, Walmart being the chief among them. Well, folks, we'll catch you back next week on the video. We'll get to see what the next week holds, both the stream of data and some of what we're seeing right here. This may be a time you start to pull back and look to take some profits. And it will catch you back next week. Thank you.